And the headline, of course, is a lot of uncertainty. That said, there's been a small help. Last week, the European Commission released a package of 14 contingency proposals that seek to avoid the worst possible effects of a no-deal exit. This includes some temporary help in finance, like one-year access to UK clearinghouses, in air travel, one-year approval for the UK to EU point-to-point flights, and trucking. The UK will be able to truck goods into the EU for 9 months as long as the UK reciprocates. But there is nothing addressing issues like the Irish border, medicines, data flows, veterinary checks, fisheries and non-financial services. There's also no comment about how the EU would make up the 10 to 12 billion euros net annual contribution the UK makes to the EU budget. And that's just the short term. What about the medium to long term? Well, WTO rules would kick in, which would mean tariffs. The Chamber for British Industry estimates that UK exports to the EU would face tariffs of 4.3% on average. It would also mean border checks, which could massively increase traffic and create delays at border crossings. The Bank of England, in their worst-case scenario, says that the UK GDP could be 7.75% lower than it otherwise would be by the end of 2023. The value of the pound could be 25% lower. Home prices 30% lower than they otherwise would be. But on the other side, Goldman Sachs says, we think government reports of a potential 8% hit to output are too pessimistic. Our own estimate suggests a reduction of more like 3%. Goldman, though, does say UK equities could fall as much as 30% in the instance of a no-deal Brexit.